The Rebel Capitalist Show.
We were talking about this the other day where, for me, if I just look at surface level, because there is so much aggregate demand that is a result of these high asset prices, if they can kind of just get these asset prices down in an orderly fashion, not a 20% in 1 week, but maybe a 20% over 6 months, and then the government doesn't deficit spend to the tune of $5 or $3 trillion, go back to 2020, 2021, then is it possible for them to kind of stick this landing and kind of have their cake and eat it too? Or are these structural components so powerful that they would still have to take rates to a level that exceeded the CPI, like Volcker, to really get them down long term? And then we mean CPI down.
Yeah, I think the idea of sticking the landing is wishful thinking to the nth degree, right? I mean, it's like threading the impossible needle. I mean, there's all kinds of analogies, but there was a great quote in the latest issue of Grant's Interest Rate Observer where I think they said, to understand where we are in these monetary times, know that the Fed could raise rates by 0.25% 37 times and still not be at where the Taylor rule suggests the Fed funds rate should be. Taylor rule says Fed funds should be 9% today, 9, wow. Right? And we're at 0. So they could raise rates 37 times and still not get to where a systematic approach to monetary policy says they should be. That's how far behind.
That's the question. Do they need to? Could they get it up to 2 or 3 and still have the same impact on CPI?
Yeah, it's not going to have that impact on the CPI. I mean, I don't think so, because let's talk a little bit about these structural forces. Yeah. So I think, a lot of people who've argued for, that disinflation is the order of the day pointed to demographics. Well, there's a great book that I haven't read yet, Charles Goodhart, and I can't remember his co-author's name, The Great Demographic Reversal. And they argue that what we're seeing today is a dramatic shift from disinflationary to inflationary forces based on the demographic shift in the economy. And essentially, if I can paraphrase a book I didn't read, you have the baby boom generation, right? The biggest generation in U.S. history come into the workforce, essentially right in the 80s, 70s, 80s. Right as inflation was peaking, you had an increasing supply of labor. At the same time, you had a trend towards shipping jobs overseas. So that was another huge supply shock, negative, supply shock to or positive supply shock to the labor force that made it possible for companies to reduce costs and reduce prices for a long period of time. But I think in the great financial crisis, we saw a lot of baby boomers say, hey, I want to retire in 2007, 8, 9, 10, whatever. Their retirement accounts go in the toilet or cut in half, and they say, wait a second, I have to stay in the labor force. I can't afford to retire anymore. Sure. So you had this supply of labor kind of sustained for a period of time that longer than it should have. And now the stock market's up, 2, 3, 4-fold from those 2009 lows, and they printed a bunch of money, pushed it even higher. And the pandemic, inspires a lot of boomers to say, okay, you know what? I stayed in the labor force 10 years longer than I wanted to. Now it's finally time to retire. And so, boom, they're gone out of the labor force. And that was kind of a natural thing that should have happened over time, but it happened, overnight, seemingly. But I think it's the BIS put out a report 3-4 years ago that shows this shift in demographics is inflationary. When you have, a growing percentage of your population is out of the workforce due to retirement or too young or whatever, and they're reliant on a smaller share of the population as the workforce, that is an inflationary dynamic in every economy throughout history. And that's what we're facing right now, is you're having a growing share of people who are not in the labor force relative to a smaller share of people who are supporting the entire economy. That's very inflationary. And I think we saw that, we're seeing that today, but we're seeing it was accelerated by the pandemic.
So labor shortage, wages go up, prices go up.
Right. And at the same time as these demographic things we're seeing, Joe Biden, I think, was a little bit disingenuous in talking about one way we're going to fix inflation is by reshoring a lot of this production. Well, it's something, that we need to do. But the offshoring of labor and offshoring of production was probably at least as important as demographics in creating disinflation in the economy over the last 30, 40 years. So the idea that bringing all this production back home is going to lower costs is ridiculous. It's going to actually raise costs, something we need to do. We obviously found that we offshored way too much production of things that are critical to national security and all these things, and we say we can't afford to do this, right? This is a bad idea. Just look at how our energy independence today, the fact that we supported the energy industry through the last 10, 15 years has actually put us in a better position in terms of national security than a lot of countries in Europe. That's kind of an analogy. I think we need to look at a lot of other supply chains, and that's what we're doing now. But this reshoring of production is going to be another inflationary force because it's going to put more demands on the smaller labor supply, right? We're not going to be able to use the labor overseas to produce a lot of these things. So this is going to create even greater labor shortages and more pressure on labor. So, these dynamics are structural that the Fed really has, can't do anything about. And so I think that, like I said, without creating a recession, they're not going to be able to bring inflation back under control at this point.
Well, let me give you a counter argument for your last point.
Yeah.
The stock market goes down 30%. They have a tough time getting it back up because the Fed put has expired or for whatever reason. A lot of those people that retired over the last 2 years because the stock market went up so much, or they bought Dogecoin or something like that. Now all of a sudden they're where the people were back in 2009, where their 401k got a 50% haircut. Do they go back to work, and could that mean we go from a labor shortage to a labor surplus, which could add some disinflationary pressure?
I think those are, even the 2009 episode that forced people to stay in the labor force, those are kind of, I'd almost call it like cyclical trends within a secular, a larger secular. The larger secular trend is this dwindling supply of labor relative to the population. So that's not going to change. That's just kind of the baked into the cake demographic situation that we're in. Now, you're going to have these cyclical swings for sure. And if the Fed does, if they create a stock market crash, then you might push. And I've even seen, pundits argue the Fed needs to hurt people's, retirement accounts to get them to go back into the workforce. Now, I don't know if ethically that's, something that you could argue for. And I don't think the Fed is willing to do either, because when you create an asset price bust, you put all these wealth effects into reverse, right? That's what the Fed is the most afraid of, is the negative wealth effect and a Great Depression, right? Which is, you get crashing stock market, you get people saying, okay, no, I need to be more careful with my spending because my retirement account went down, and you get all of these psychological dynamics that are the opposite of the inflationary ones we have today that create a Great Depression. So I think, the Fed does have the ability. I mean, they could crash the market tomorrow if they wanted to. Are they willing to do that? I think that they've made it really, really clear in recent years that the full employment side of the mandate is 10 times more important than the stable prices side. And they're going to bias in that direction almost no matter what. That we're not going to, we're going to do anything to hurt employment. And that means the stable prices side of the mandate is the side that they let go.
How high do you think that would have to get before they changed their mind or reprioritized?
How high would the stock market have to get?
No, the prices. How high would CPI? I mean, do you think if CPI, this is a thought experiment, do you think if CPI was 15%, that it would still be okay? We've got to protect the wealth effect above and beyond just crushing the poor and middle class with high CPI?
Yeah, I think what I'm most afraid of is, right, nothing goes in a straight line. I think what I'm most afraid of is we get a local peak in CPI sometime over the next few months, and the Fed says, okay, look, it's gone from 7.5, 6.5, 5.5, 4.5, maybe. Look, it's coming in. We don't have to keep tightening. We don't have to keep, doing these things. But, unless it comes back below 2, right? You're still, you could argue the stable prices mandate means 0% inflation, right? That's literally what stable prices mean.
I would argue that.
So the idea that 2% inflation means stable prices is, asinine in the first place. But as long as they're above 2%, I think they need to be hawkish. I just don't think they're willing to do that. I think we could see a local peak in inflation. And, just look at the 70s, right?
Or the 40s, or the 40s, 70s, better.
You had these spikes of inflation, but they came back down. And so every time it came back down, it felt like, oh, okay, maybe our inflation problem is going away. And then, no, it spiked, back up again. And I think that we're probably facing a similar situation over the next decade, that inflation is in a secular uptrend now. And that doesn't mean it's going to stay at 7.5. It just means, it maybe comes down to 3, goes back up to 5, 6, 7, 8, and maybe we even see some numbers in the teens, at some point. But yeah, I don't think, what did it take to, in terms of psychology, in terms of consumer sentiment and all these things, for Paul Volcker to be able to do what he did? It took 15 years of inflation rising, out of control, essentially, before, and even at that point, what Paul Volcker did was against what everybody wanted him to do. That he was a pariah at the time he was doing it.
And two prior rate hikes, Jesse. Remember, we got to put ourselves in that mindset. Let's go back, pretend that we're in. When did he do that? 81 or 80? I think 81, right?
Right.
So if we're there as just the average Joe and Jane, and Volcker says, you know what we need to do? We need to take rates positive, real rates positive, and we need to crush the economy and create a recession. Everyone would be like, it's not just the fact that they didn't want him to do that. It's the fact that that had been tried twice before in the 1970s, and it didn't work. It didn't stop inflation, but what it did do is either crush the economy and or crush the stock market. So you can imagine how emotional people were. Like, no, you're absolutely out of your mind. We've tried this. It doesn't work. You're just going to ruin everything, and it's going to make things far, far worse. So I think that's a part of history that's underappreciated when you look at what Volcker was doing.
Oh, absolutely. And unless you were in his shoes, you didn't really appreciate how difficult it was to piss off everybody in the world, right? And crash the largest economy on the planet, essentially create, a super painful recession and all of those things that, you have to get to a place, very recently, right? It wasn't too long ago where Jay Powell said, too low inflation may be the greatest challenge of our time.
Yeah.
Right. And we're, Mario Draghi and people are saying, we're going to do whatever it takes to prop up markets and restoke inflation. Right.
Yeah.
And so, we were just there, right? Where everybody is believing we don't have enough inflation, right? Inflation's now, as a result of that psychology, right, which, is embedded in everything from corporate policy to everything, inflation is never coming back. So we make all these decisions that ensure if inflation comes back, right? Now that it comes back, it's going to take a long time. It's going to take probably, and it pains me to say this, but it's going to take a lot of pain, I think, before we get to the point where we realize, no, it's not too low inflation that's the greatest challenge of our time. Now it's inflation. And we have to do whatever it takes to break the back of inflation. Yeah. But it's not going to just be a couple of years of inflation being, above trend, even significantly above trend, to change people's mind in that regard.